Financial advisors' do's and don'ts. Are you taking money advice from broke people? Today, we're diving into the crucial do's and don'ts when it comes to financial advisors. Can you really trust them, or are they just broke people giving advice they don't follow themselves? Let's break it all down, starting with understanding the true role of a financial advisor and how they impact your financial decisions. 1. The role of a financial advisor. When it comes to managing your finances, financial advisors are often seen as the ultimate experts. However, not all advisors are created equal, and understanding their role is critical. A good financial advisor can guide you through investments, retirement planning, and wealth management. But here's the catch. Some advisors prioritize their commission over your financial well-being. Imagine this. You sit down with an advisor expecting tailored advice, but instead they push products that may not suit your needs. This happens more often than you'd think. Advisors can be either fiduciaries who are legally obligated to act in your best interest, or commission-based agents who might prioritize their income. Knowing the difference can protect you from costly mistakes. Before hiring an advisor, always ask about their credentials and payment structure. Do they earn a flat fee or commission? Fiduciary advisors, for example, are less likely to steer you toward unnecessary products. Additionally, check their background through regulatory organizations like FINRA or your local financial oversight body. Awareness of their role sets the foundation for making informed decisions. 2. The do's of working with financial advisors. The first thing you should do is set clear financial goals before meeting an advisor. Whether it's buying a home, saving for retirement, or reducing debt, having specific goals allows your advisor to provide targeted advice. Without clarity, you risk being misled or overspending on unnecessary products. Next, always do your own research. Even with professional guidance, understanding the basics of finance empowers you to spot red flags. For instance, if your advisor recommends a high-fee mutual fund, knowing the average market fees helps you question their choice. Stay engaged during meetings. Ask questions about how their suggestions align with your goals. Finally, document everything. From initial consultations to investment decisions, keeping a record ensures transparency and accountability. If something feels off, trust your instincts and seek a second opinion. Remember, a good advisor should encourage your involvement, not discourage questions. If you found this video helpful so far, please share, like, and subscribe for more financial tips. And don't miss our related video. Banks are costing you money. They are not your friends. Be financially smart. Find the link in the description. This video will reveal how financial institutions may be working against your best interests and how to stay ahead. 3. The don'ts of working with financial advisors. Avoid assuming your financial advisor is a miracle worker. Their job is to guide, not make guaranteed promises. Be cautious if they claim they can beat the market or offer investments with unrealistic returns. These are common red flags that could lead to poor financial outcomes or even scams. Don't shy away from discussing fees openly. Many advisors gloss over their fee structure, leaving clients in the dark. Always clarify whether you're paying a flat fee, an hourly rate, or a commission. For example, a 1% annual fee on a $500,000 portfolio might seem small, but adds up to $5,000 annually. Transparency is key to understanding if you're getting value for your money. Most importantly, don't follow advice blindly. Always verify suggestions and consider alternative strategies. For instance, if an advisor recommends cashing out your retirement early, think twice. The tax penalties and loss compounding growth might outweigh any short-term benefits. 4. Signs of a good versus bad financial advisor. A good financial advisor prioritizes education over sales. They'll explain complex concepts in simple terms and ensure you're comfortable with every decision. For instance, when discussing retirement accounts, they'll outline the pros and cons of a Roth IRA versus a 401k rather than pushing you into one option. In contrast, a bad advisor might pressure you into quick decisions. Watch out for advisors who overemphasize urgency or avoid answering tough questions. For example, if they say, this investment won't be available tomorrow, it's a tactic to rush you into a choice without proper evaluation. Another key difference is how they handle risks. A good advisor tailors investments to your risk tolerance and long-term goals. A bad advisor, however, might suggest overly aggressive or overly conservative strategies that don't align with your financial plan. Always look for balance and personalized advice. 5. Protecting yourself as a client. The best way to protect yourself is by staying informed. Regularly review your portfolio and financial plan to ensure they align with your goals. Use free tools like Personal Capital or Mint to track your finances independently. This helps you catch discrepancies early. Additionally, consider educating yourself through books, podcasts, or online courses. When you understand basic concepts like asset allocation and expense ratios, it's harder for anyone to take advantage of you. Knowledge is your best defense against poor advice. Finally, remember that trust is earned. If you ever feel uncomfortable or unsure about your advisor's actions, consult an independent financial planner for a second opinion. It's your money and your future. Take charge of it. Being informed about the do's and don'ts of financial advisors can save you from costly mistakes and set you on the path to financial success. But there's more to uncover. In our next video, banks are costing you money. They are not your friends. Be financially smart. We'll delve into the hidden costs and traps financial institutions set for unsuspecting customers. Subscribe now and turn on notifications to stay informed. Your financial freedom is just one smart decision away. Don't miss this opportunity to transform how you manage your money. This video is for informational purposes only and should not be considered financial advice. Always consult a certified financial professional before making any significant financial decisions.